Owning a home is an American dream, but unfortunately that dream is being crushed with the increased housing prices, values, which can be a good thing if you own a home. But what about the interest rates? Those are cranking too. Now, the National Association of Realtors just reported that 26% of the purchases of houses were first-time home buyer homes. However, that's the lowest that it's ever been since they've ever started recording it, and that's been decades. So what do you think? Comment below, let us know. Or do you feel like you're being pressed out of the market? Do you feel like you're being overpriced out of the market? The average price of a home right now is $416,000. You know what your mortgage payment would be if you did an FHA loan with just 3.5% down on $416,000? I'll tell you, it'll run you $3,700 a month. Not too many people can afford $3,700 a month. As a matter of fact, the average income in the United States is $56,000. So if you were to purchase a $275,000 home, that's going to put your payment at $2,400 a month. And at $2,400 a month, in order to pay that, to afford that, you're going to have to make $110,000 a year. Now, I don't know about you, but that's frustrating for a lot of people. It's frustrating for our clients. It's frustrating for consumers because they're like, wow, what happened, Wayne? What stirred all this up? Well, I can tell you really quickly what stirred all this up. They left the interest rates too low for too long. Too low for too long. Did you know that literally in an 11-year span, interest rates never went over 5% on a mortgage? And that's why 85% of the homes that currently are mortgaged right now, 85% of the homes that have a mortgage in the United States have a 5% or lower fixed rate, meaning their payment is affordable. But hey, don't take it from me, but according to a lot of people, the housing market's gonna crash. But what I do want you to know is to listen to someone who actually has boots on the ground, who's been selling homes. I've closed 4,000 houses in 28 years, and I'm not saying that to brag. I'm saying it to let you know, as a consumer watching videos like this, that this stats, this information, this data is coming from somebody that actually is out here doing it, out here selling real estate, and have been selling real estate for nearly 3 decades. So the question is, Wayne, why won't the housing market crash? Well, a couple of things. One, people got very low interest rates when they purchased property, and they had to be extremely qualified to purchase such property. Gone are the days of the subprime mortgages where basically you could fog a mirror. They had these things called ninja loans. No income, no job, no asset, no problem, go buy a house. And mind you, you can get a gift. And I've heard mortgage lenders say, well, you can get a gift. Well, who's going to gift you $10,000, $12,000, $11,000? I can tell you who can do it. The homeowners, the sellers, and you need to know that when you're going to purchase a property. That's why it's so important to have somebody that's in your corner that's working for you, that can get your closing costs paid for you, all of your closing costs paid for you. Now, how much are closing costs? Closing costs typically run around 3.5% of the purchase price of the property, or better yet, 3.5% of what you're borrowing. So if you're putting down 10% on a property, or $10,000, you just subtract that from it. You get what I'm saying? Now, here's one thing that I can't predict. I cannot predict the job market. I can't predict if there's going to be massive layoffs or anything like that. I don't think anybody can, but I can tell you what you need to follow, what you need to pay attention to is the price of crude oil. Because in 2007 and 2008, we've seen those prices really start to tick up. And once they hit $144 for a 55-gallon drum barrel of crude oil, we seen gas prices at $6 and $7 a gallon. When you see that, you'll see layoffs. But let's just hope and pray that doesn't happen, because nobody wants to be out of a job, nobody wants to be out of work, and that's very stressful. You got to be able to pay your bills. But unfortunately, there's still people out there, regardless of the economy, whether it's going good or going bad, there's always people that are in somewhat of a crunch. It's just the way of the world. It's going to happen. But just know that nothing lasts forever, and there's always hope. Now, here's a crazy statistic, a number that I just heard, is that renters, people that are renting houses, are having to vacate their properties. They're having to move out. To me, whether you own a property or rent a property, it's your home. You make it your home. But imagine being told you have 30 days to move, and you don't have a choice. And what's happened is real estate investors, landlords, are being forced to sell their properties because they basically can't keep up with the taxes and insurance and the rate that everything's going up. So look, it's not just taxes and insurance, it's HOA dues, it's maintenance fees, all of that tends to trickle up. And when it goes up, the landlord has two choices: to sell the property, cut bait and run, if you will, take their equity, go invest it somewhere else, or they have to increase the rents. But what we're finding is the rent increase that they're having to meet, the market won't justify that rental payment. So what does that mean? That means that they too are having to sell their property, but sometimes they're just selling property because they're taking apartment complexes of say 100 units and they're turning those into condominiums. Because why? Well, we're in a thing called a housing shortage, believe it or not. There's only a 3-month inventory of houses on the market in the United States. That's right, there's 1.6 million real estate agents. There's only 960,000 houses on the market for sale. Now, that may seem like a lot of real estate, a lot of properties, but at the rate that buyers are currently purchasing homes, if not another single home is listed, in 3 months, there would be no homes for sale. The buyers would have absorbed that inventory. So that makes me want to jump on the topic of home builders and building properties, and why are real estate investors like Warren Buffett investing billions of dollars into the top 3 home builders? It's because there's a housing shortage. Listen, if you're a real estate investor or any sort of investor, when you put billions with a B of dollars in something, there's only one reason why you're doing that: to get money back, period. So yes, you'll see home builders like D.R. Horton and Lennar actually building more homes. And not only are they building more homes, but get this, they're building homes for investors. That's right. They're building 50, 60, 100 houses at a time for big corporate investors. These are homes that never hit the market. They'll never go to market. They'll literally just build out a subdivision. Those homes are already contracted and already purchased. These builders are building these properties just to be rentals. They're never going to be for sale. And you hear people say, well, they don't want you to own anything, they just want you to rent. Well, nobody's stopping you but yourself, because we still live in a pretty free country where we can go out and purchase a piece of real estate if we feel the choice to do so. We have that choice and we can still do that. And that's why I always tell people, listen, as long as you pay for it, nobody can take it away from you. And of course, there's people out there that will argue with that will say, Wayne, if you don't pay your taxes, they're going to take the property. True. They will. Now, the Federal Reserve did meet and they opted not to raise the rates, but they are going to meet again in this last quarter of 2023, and they will probably raise the rates. Right now, they're at about 7.5%. So that means basically you're at just about 1% of what your loan is borrowing. So just kind of do the math. For example, right now it's costing you $87 a day. So if you, in other words, if you bought a $275,000 house, $87 a day to pay for that property, you got to know what you have coming in as far as money per day, and then what it's going to cost you per day. So a good rule of thumb, if you see a property that's listed and it's $300,000, right now at 7.5% interest, your mortgage payment's going to run you about $2,700 a month. Now, if you're a first-time home buyer, second-time home buyer, third-time home buyer, consider this. Consider buying a duplex, a triplex, or a quadruplex, because you can purchase a property like that, and there are tenants already in those properties. That way you can live in one side, you can get a USDA loan. You've heard me say that a lot. USDA loans allow you to buy a piece of property. You don't have to pay any money for the down payment. The government is giving you the money for the down payment. This is very much like a VA loan. This works. All 50 states. You got to have a 620 or higher credit score, 2 years proof of income and on the job. And if you can do that, you deserve to talk to a lender. So they can at least tell you yes or no, but a good one will say no, but here's what you need to do to make it right. Now, making it right is making your score 620 and getting your debt to income ratio in order. And once you do that, you can purchase a piece of property. But listen, it doesn't matter if it's a single family home or if it's a multifamily home. I bought my first home 30 years ago, and if I could give myself advice, I would say, Wayne, don't buy a single family home, buy a duplex, a triplex, or a quadruplex. And that way you have rental income. And after a year, you can do this thing called USDA loans. You get into the property for no money out of pocket. I have 88,000 agents that get my clients to pay, the seller pays the closing cost. It doesn't cost you any money to buy a house. Literally, you can go buy a house right now cheaper than you can rent. That's why I say you deserve and at least give yourself the opportunity to at least be told no, because the answer is always no unless you ask. Now, perhaps we're at the bottom of this interest rate hike increase. That's literally kind of the rumor, if you will. But who truly really knows? What we do know is we're still in the housing shortage, and that housing shortage is keeping prices of properties going up. Cities like Tyler, Texas and Baton Rouge, Louisiana, they're predicting almost double-digit property value increases from June 23 to June 24. That's right. Zillow says that you're going to see almost double-digit price increases in 200 of the top cities, and these are cities that are not huge major metropolitan cities. They're on the outskirts, if you will. And guess what? On the outskirts, you guessed it, you can do a USDA loan. So here's a question that you should be asking. Wayne, why is there a housing shortage? It's really simple. There's a housing shortage because people purchased houses and their payments are very comfortable. I said at the first of this video that 26% of the purchasers of homes were first-time home buyers. Well, if 26% were first-time home buyers, and that's the lowest that it's been in decades, perhaps one of the reasons why it's been so low is that, one, mortgage rates are high. They're higher than we've seen in 11, 12 years. But also, the inventory, just not a whole lot of houses on the market for sale. And that's the reason why you're seeing more new construction. You'll see more homes being built. Now, will they be affordable homes? I don't really know, because when you look at the top 3 home builders, the average sales price of the top 3 home builders just so happens to be the average sales price of a home in the United States, which is around $420,000. And you get a lot of people like, Wayne, I can't even afford to buy a brand new house. But this is what I always suggest to people. Listen to me. You may have to move out a little bit. I know that's not what you want to hear, but when I purchased my first house, it wasn't the ideal city that I wanted to live in. I was born and raised in Nashville, Tennessee. That's where I grew up. I lived a little bit on the outskirts, but my first house was a 20-minute drive from Lowe's and Home Depot or a large major grocery store. However, I was able to purchase a brand new house. So don't rule out those rural areas on the outskirts of town, because not only can you get a nice home, you can get a new home, you can get an affordable home, but you can also get a USDA loan on that home, and it costs you no money out of pocket. Now, if you watched this entire video, thank you, thank you, thank you. I'm extremely blessed to be able to share with people the information, the knowledge, and what I've learned over the years. And I just hope that people take it and run with it. They do something with it. They make an improvement in their life, because regardless of what anybody tells you, you deserve to own a piece of real estate. You deserve to be able to purchase a piece of property. You can do that. So if you need help, just reach out to us. My number is 985-626-1313. You can call that number. You can text that number. Someone at my office will answer that phone number. Oftentimes, I'm the one that's answering that call, and we'll be glad to help you, because we literally have 88,000 real estate agents all around the country. You name the city, you name the area, we can connect you with someone that can work with you to get you in any property that you wish. Thanks for watching.